They probably got caught up in some of the excitement during the last peak cycle, like many of their customers. Is Ericsson sandbagging on this guidance? It seems, based on that guidance, they're expecting revenue to be flat at best with fiscal 2024.
Aehr Test Systems. If you haven't caught the video we did on their preliminary numbers, make sure you go back and watch that. But let's talk about some of the things mentioned on the earnings call that gives us a view into the future for this company.
Yeah, for sure. And maybe not just a view into the future on Aehr Test Systems, but maybe the semiconductor industry overall. So we've been updating this chart on different semiconductor end markets for the last couple of quarters. And an update there at the bottom on auto and industrial. It seems that based on Aehr's preliminary guidance for fiscal 2025, which just started on June 1st and lasts till the end of May 2025, we have indeed hit bottom for auto, industrial, and power chips. So that is fantastic news, confirms all of the buying activity that we've been doing here in recent months. Hooray for us. Hopefully, hooray for you too.
Just a reminder, if you are not familiar with Aehr Test Systems, they provide semiconductor wafer level test and burn-in equipment that's been historically used primarily on silicon carbide chips that are used in EVs. That's why we're focused on that auto portion of the semiconductor cycle. But as we'll see in the upcoming discussion, Aehr Test Systems is definitely expanding beyond just silicon carbide chips.
And we've addressed this in past videos. Just a quick refresher. If you don't know what test and burn-in systems are, test is what it sounds like. It's a way to test the wafers or the ultimate devices made out of the chips that get diced out of the wafer for quality control. Burn-in is a process that gained wide acceptance with this switch to silicon carbide, especially for electric vehicles, but now for lots of other things too. HVAC systems, solar power, data centers, perhaps. And what that is, think of it as, in layperson's terms, a way to age the chip, not just to weed out bad chips from the wafer, but a way to age that. And it has to do with the structure of the silicon carbide substrate itself. Think of it aging a good wine before it becomes drinkable.
Or aging a fruitcake.
Well, with that said, there's a lot of companies interested in making fruitcakes these days.
Yes, there are. Historically, ON Semiconductor has made up the majority of revenue for Aehr Test Systems, but they have been engaged with many other companies as well over the years, and it appears that some of those talks are coming to fruition.
Okay, we're going to go through a series of quotes from CEO Gayn Erickson from the earnings call. And the first potential for expanding the ultimate semiconductor manufacturing customer base for Aehr starts with silicon carbide. And that goes back to electric vehicles. The reason, even at this particular point in time, there are a lot of auto manufacturers that are not using silicon carbide yet in the drivetrains. It sounds like Aehr is starting to get some significant traction with some of those automaker suppliers, the companies that make the actual power chip modules in places like South Korea and China. That's the region of the world that is really leading the charge in electric vehicles right now. In North America, in the US, headlines continue to swirl about EVs are just not that great. Sales are slowing down. But if you're viewing the story in isolation, just in the US, you're missing the bigger picture. EVs are still very much a growth trend worldwide.
Beyond the EV market, solar, data center, and other industrial applications for power conversion using these chips as well that require burn-in and testing. When Aehr has been reporting new orders in the recent months, what they've been talking about is the wafer packs and the contactors used in their machines. They've definitely had a slump in actual machine sales, but they announced that they received 12.7 million in orders from one of those silicon carbide producers just for the wafer packs. And CEO Gayn Erickson did break down the total revenue in this fiscal year 2024. And he said that 57% of the total revenue was that consumable product, the wafer packs and contactors. So only 43% of system sales in fiscal year 2024, indicating that there was a bottom for the EV and power market.
Yeah, that's right. As silicon carbide picks up pace again, it sounds like starting the second half of 2024, which is now, and into 2025, maybe even beyond that into 2026, we'll see some of the revenue still back towards the actual systems, the actual machines. This is that classic razor and blades type of business model. Aehr sells the razor, and then the customer needs to continue to buy more blades over time. Those blades wear out, they throw them away, they get recycled, whatever, they have to buy new ones. So we're in the midst of that cycle now where more razors will get sold, and that will lead down the road to hopefully more blades, the wafer packs, the actual devices that make contact with the wafer to test and burn them in. Now, Casey, any discussion on semiconductors these days would not be complete if we didn't talk about artificial intelligence, AI. And of course, Aehr has found a way to work that into the conversation as well. Is it a legitimate conversation point around this company, AI? What's going on?
Yes, it is. And just to clear things up, later in the call, Erickson was asked again about the AI accelerator company that Aehr could potentially be working with. And he said, just to take it off the table, it's not NVIDIA. He didn't want to lead anybody on, but the answer is they are not working with NVIDIA currently. However, that being said, they are working with an AI accelerator company to move their AI processor test and burn into wafer level, and have secured a commitment with them to evaluate their Fox solution for production level test and burn in other high power processors. That's a quote from Gain Erickson. They are hoping that this AI accelerator company, whoever it is, does start using Aehr products to test their semiconductors.
Yeah, and this is a potentially big additional market for Aehr. Obviously, in the grand scheme of things, $100 million a year in spending in a manufacturing equipment industry that is roughly $100 billion per year. This is small potatoes. For Aehr, when we get into their financials here momentarily, you'll see a new up to $100 million annual market. Could be significant. In our last video on Aehr Test Systems just last week, we talked about the balance sheet. They do have roughly $50 million in cash and short-term investments on hand. They found a place to spend that money, right?
Yes, they did. They have just made an acquisition of InCal Technology, which has test and burn in equipment for specifically AI accelerators, graphics, and network processors for high performance computers.
This is potentially a very complementary acquisition for Aehr. This is a small business. It's going to be roughly 10 to 12 million in annual revenue from InCal. But the piece of equipment that Aehr is getting its hands on that was specifically called out on the earnings call is that Alpine machine down there close to the far bottom. Ericsson promised that later in the year, they would be providing some updates on some of the opportunities that are ahead for InCal and this new AI accelerator test and burn-in market that they're trying to address with this acquisition.
Let's talk about another area that Aehr has been hoping for the business to grow, and that's in photonics. Companies like AMD, NVIDIA, and Intel are looking into the potential of using optical networks to connect these high-powered accelerated computing semiconductors. This is where Aehr could come in to play with companies like that, with AI computing systems.
Yeah, and this is obviously highly related to the whole AI and accelerated computing infrastructure build out. The reason why test and burn-in might suddenly become so important is the silicon photonics are getting shrunk down to such a size that they can actually be embedded in the packaging. And so you get chip to chip embedded packaging in the actual accelerated computing device. If one of those silicon photonic interconnect devices is no good, but it's embedded in the package itself, now you've ruined the entire device, which, as all of you know, is very expensive. You're talking about high-end NVIDIA accelerated compute systems costing tens of thousands of dollars a piece. The last thing you want is one silly little part like an IO interconnect gone bad to ruin your purchase. So That's why this is a potentially important market for Aehr as well. No meaningful revenue yet, but another thing that Aehr has been calling out as a potential in the years ahead.
All of these things that were mentioned on the earnings call, and we've been watching all of this very carefully in the last couple of years, seem like Air is headed for some pretty solid growth prospects. Air is definitely being much more conservative in their guidance in the upcoming fiscal year 2025, which has started just now this summer. Now, if we back up to last summer at the beginning of fiscal year 2024, you can see that they were overly optimistic. They said revenue would be at least 100 million at that time. And then in subsequent quarters, they've continued to decrease that outlook. The end of this fiscal year, 2024, ended up just over 66 million. Why are they being so conservative in fiscal year 2025, where they expect a total revenue of around 70 million?
I think if we can be a little bit critical of Ericsson and the top team at Aehr Test Systems, which I think all of you viewers hopefully appreciate, we want to be balanced. They probably got caught up in some of the excitement during the last peak cycle, like many of their customers. And it sounds like initially, headed into 2023 and through the summer of 2023, a lot of those customers on semi, some of the other silicon carbide manufacturers had some pretty high expectations for needing lots of test and burn-in equipment. And it wasn't until pretty late in the game that they told Aehr management, you know what, we're going to have to pause before we take delivery of that equipment, which trickled down into Aehr's lower revenue guidance. And so if we can critique Aehr's top team, that's where it would be. Maybe factoring for some downside to customer orders, given that they are an upstream supplier of equipment. So that's probably why the guidance for this next year, just at 70 million, implies very little growth at this particular point, even including the expected 10 to 12 million in revenue from the InCal AI accelerator acquisition. Now, how about a defense of Aehr's management team, though? Casey, you put this illustration together at the beginning of this year. What are we looking at here? Why is there a small furry rodent on this chart?
That beaver built a dam between the upstream and midstream companies in this visual. Air is upstream. It seemed at the time last year that every single person on the planet was going to be driving an EV soon. And so companies like On Semi and ST Micro, Wolfspeed, Mitsubishi, who provide those silicon carbide chips to the EV automakers, require a ton of equipment to test and burn in those chips. Unfortunately, that did not come to fruition. There was a slowdown in EV sales, which led to a slowdown in the inventory needed to supply those EV automakers, which led to that upstream decrease for Aehr. They weren't able to sell as many machines or even wafer packs to those companies because those companies were putting off their orders until later this year. So in defense, multiple companies got the rug pulled out from them.
Okay, that makes sense. It's a small business. We're talking about a tiny company here. So this visual from finchat.io does not have the Q4 fiscal 2024 revenue, net income, and free cash flow included yet. This is through Q3. The ultimate number is going to be, as you said earlier, Casey, 66 million, which is actually a new annualized revenue all-time high for Aehr. They eked out slight growth over fiscal 2023 that ended last summer. And they are forecasting for another record in fiscal 2025 at 70 million. Here's the balance sheet again. There's no debt on hand. We can assume 14 million is going to come off the top of the cash and short-term investment balance to purchase InCal. Balance sheet is still in good shape, which brings us to valuation. Casey, what do you think? Should shareholders of Aehr Test Systems be concerned over that? Let's just call it what it is, lackluster looking guidance for the next 12 months ahead that end in summer 2025.
Share price for Aehr is currently around $18.80 as of July 17th. Market cap of around 550 million. That brings Aehr to 78 times expected fiscal year 2025 earnings before tax. Valuation is pretty high based on those estimates. We've been DCAing into Aehr, but we do plan on winding that down in the next couple of weeks by the end of July.
Yeah, based on the stock price rallying just in the last couple of weeks, because of that DCA plan that we did, the position has gone from sub 0.5% of our portfolio to suddenly fast approaching 1% of our portfolio. That's ultimately the reason why we're winding down the DCA. This is still a small business, part of our small cap basket of about 24 very small, but potentially high reward businesses over the long term that could eventually become a core portfolio position. That's why we're ending the DCA. The guidance specifically, though, 70 million, including the addition of InCal. Is Ericsson sandbagging on this guidance? It seems, based on that guidance, they're expecting revenue to be flat at best with fiscal 2024.
I believe, yes, that there is some sandbagging going on. I think this is a very conservative number based on all of the information given in the earnings report, as well as the earnings call and question and answer portion of it. But I think that's the right move. They've definitely overestimated, and that's cost them significantly in the past. So I think in the future, they're planning on being a little bit more conservative while still remaining very excited and very positive for the potential changes and additional revenue that's coming in.
Yeah, I'm going to agree with you. It seems very conservative. It seems like the right move. I would like that maybe conservative guidance to continue as we progress through the next growth cycle. It seems like, again, we're back to a new growth cycle for power, industrial, on automotive chips. Aehr has a lot of upside if that cycle continues to move in that direction. And so hopefully the conservative guidance continues. I'd much rather see them underpromise and overdeliver. We expect great things from this business. We're happy to be shareholders still.
Make sure you check out our Semiconductor Insider membership, only $5 a month. It gets you access to all of our show notes, access to Discord and our community of members, live Q&A events, lots of value for your money for just $5 a month. Make sure you check it out. Link is in the description below. You can join us over on Ko-fi. Take care, everyone. We have so many more earnings to sift through. We'll see you all soon at Chipstock Investor.